Good morning, traders from each and every part of the world that you're joining this series of the daily morning market call from. My name is Kefa Eric, and I am one of the market analysts here at HFM. HFM links you to the global markets to access various financial assets. Now, today we are going to be looking at an interesting emerging topic which is in line with what we have been doing on each and every day series of the daily morning market call, and that is the question of the dollar seems to be strengthening somehow. Okay, now it is not by chance, it's not by coincidence, it is due to the economic and geopolitical forces, right? But before we dive right in, I would like to remind you that this is going to be a pre-recorded YouTube video to mean that you could access this YouTube video at your own free time on our YouTube channel by searching HFM Kenya. Kindly like, subscribe, and click on the notification button so that you are not left out in future content that we produce from time to time. It is our commitment that we will keep making content that is meant to bridge the educational gap to help traders realize potential profits and grow in their financial journeys. So I will give a 2 seconds moment of silence for us to go through that procedure before we proceed to the charts. Okay. Now, with that said, yesterday we had news coming, high impact news coming from the United States. Let's go. Let's filter. You could find this on hfm.com, economic calendar. When you come to tools, go to economic calendar at hfm.com, tool and education, then economic calendar, and it will allow you to get to that particular face. So let's go to and filter high impact, show results, and then for yesterday, which is 26, and then apply. I'll put playing just a minute. Very nice. So this week we have had a number of high impact news having mixed reactions. We have had global manufacturing PMI, which came out negative below expectation, and the global services PMI, which came out at 54.3%, which it's positive, high above expectation. A trader would ask, if we have mixed reaction and I am a scalper or day trader, possibly also a swing trader, how do I go about this? We would wait for market structure to form, that is if you do not understand the magnitude of the high impact news. But in this regard, I'm sure you've heard the phrase that the United States is largely as a labor-based economy. So the strength of the United States dollar mainly come from its labor based data. It's a labor economy. This is due to a lot of people getting jobs, a lot of citizens getting jobs, paying taxes to the government, which the government in turn is reflected on the financial market on the strength of these particular currencies in relations to other currencies. Now, having this in mind, on top of this, from Monday we discussed that the targeted tariffs by the Donald Trump administration on Asian-based companies seems to have somewhat positive remark on stocks that gave a perceived positive reaction on the dollar. A likely scenario also, we are going to see on indices and group of stocks. But before we dive right into that, let's go to the charts and see the presentation of the aforementioned. Beginning with gold. Gold still bounced off from the area of interest, still printing to the upside. Some would also ask, why do we have gold continue being bullish, and yet the United States dollar is strengthening. This is because as much as the United States dollar seems to be recovering, that could be the correct phrase to use, the tensions and uncertainties in the world are still on the verge of blowing up. Okay, these tensions are brought about by the same targeted tariffs that Donald Trump's administration alluded to enforce from early next month. Okay, so being long on gold would be considered a risk-off approach, but remember also to observe risk management. When we come to stocks, beginning with Nasdaq, that's 100. Yesterday we had a bearish move attempting to retest this particular area of interest. I should be extending them right now. This is quite easy, guys, because in technical analysis we tend to study past historical charts to find repeatable patterns in order to tell future possible market direction. So we see a little bit of retest there, and price printing on the attempting to continue printing on the upside. Being also long on this particular stock would be considered a risk-off approach, possibly a scenario that we also likely to see on S&P 500. All right, I will mark them out in the future. On European stocks with concentration on the Nasdaq attempted to take out the high. It did not close above. Price seems to be printed to the downside. This is German 40 or the DAX 40, and we seem to be in a consolidation, so we would want to keep off from this market for now until we have a clear market direction, either the lows being taken out or price coming and trying to attempt to retest this area of interest, monitoring what is happening in that particular part of the world. On currencies, GBP USD, data coming from England in regards to inflation year on year came below expectation, challenging the strength of the Great British Pound against the United States dollar, which is seemingly holding on this demand, on this area of interest here. Would be monitoring it closely, but the most likely scenario is if we still have high impact news from the dollar coming out strong, we will break below, and that will give us confidence to get in for the short position, challenging putting out the statement that the United States dollar is recovering against the Great British Pound. However, with news coming from both England and United States, in this regard, coming from the United States coming below expectation, we'll likely see highs being taken out and price printing on the upside. So in this likely scenario, it will be much more safer to hold. On oil, we bounced off from the area of interest. No serious candle closure, just wicks, and price printed on the upside. And remember, this is coming cautiously after the Donald Trump administration officials visited the United Arab Emirates, and deals were closed up to 1.4 trillion US dollar in the United States for the next 10 years. And I'm pointing out the United Arab Emirates, having in mind that they sit on the high table of oil producing countries. So into the days we shall be monitoring this movement, but as it is right now, the United States is still putting up pressure on OPEC countries to reduce the prices of oil. So I would consider this as a retracement, and to go to I would go to a lower time frame, look for lows being taken out, and that would give me confidence and impetus to keep looking for short positioning, so that I'm in line with fundamental analysis and marrying it with technical analysis on the areas of interest. As a disclaimer, this by any chance is not financial advice. It's purely meant for the for educational purposes. Kindly do your due diligence and remember to observe risk management. And with that, how far will we have the dollar attempting to regain its strength? I guess we shall wait and see as new economic data is printed. For this and many more series, be sure to be joining the Daily Morning Market Call. Until this point, my name is Kefa Eric, one of the market analysts here at HFM. And until tomorrow, the same place, the same time, to do things the same way that has proven consistently profitable. God bless and take care.